The crypto markets today are big, but they're not enormous. When we take actually a look at how big they are, they're only around $200 billion as of today. I'm sure this will go up in the future, but right now, the entire crypto market isn't even as big as Apple. It's not even as big as Microsoft. I think today, Bitcoin just passed McDonald's in value, but still, that's one company, one international corporation. So there is a long way to go for the value of Bitcoin and all the other different cryptocurrencies. Now, the next wave of funds that are going to come into the system are going to be through institutions, through asset managers, and other people who want to put in billions of dollars. So think about it like this. If you wanted to right now go and take your Bitcoin and put it into your pension fund in a tax-free environment, you couldn't. It's just impossible to do so. And there's a few reasons for this. So first, the Bitcoin itself has no title. It's not auditable. It doesn't actually exist as an asset. So your bank or your pension fund or anyone else cannot actually take ownership of that asset. It exists in the blockchain, but there's no way for them to take legal, titled ownership of that asset. Secondly, there's a lot of risk, well, more risk for a pension fund or an asset manager with billions of dollars. They don't want to take the risk on current crypto exchanges. Now, for a retail investor, even if you're working with a few $100,000 or a few $1 million, it can still be a little bit of risk. But as a retail investor, you're able to have an appetite to take that risk. But if you're a large pension fund and you're dealing with a large sum of money, it's not something that you do. So right now, you would pass on current crypto exchanges. You don't know who they are, you don't know where they're based. Of course, there's some American ones like Coinbase and Kraken and the other ones. But if you really want to do a large sum of money, you have to go to an OTC trade desk, and you're really putting the risk on that desk. So there's a lot of counterparty risk which actually hasn't been delegated yet or fixed. The third thing is that there's no legal judicial enforcement of that asset. So let's say something happens to your Bitcoin. What do? Well, right now, if your Bitcoin disappears from your wallet, there's nothing you can do. But there needs to be, because in case anything happens with your pension fund, you need to be assured that your money there and your capital that's been building for a long time will still be there. We can't put this type of volatility, type of risk into a system which exists right now. So this is actually what institutional investors are thinking about on a day-to-day basis. How can we protect our funds of our investors, of the people who actually give us money in the first place? How can we make sure that we're staying very compliant with all laws and regulations? And how are we able to show clearly that we have certain assets on our balance books? And this last thing is such a basic thing. You think about a company who wants to buy Bitcoin or even a pension fund or anybody else. If they were to go out and buy that crypto asset, they would have nothing that they're getting back. So they would have to write it off completely. And it becomes an instant liability, which later on would have to become a coupon. It's a very deep and very deep legal hole that you don't want to go down. So what we're doing at CyberTrust is we're creating what's called a Bitcoin global note. And this is a derivative product. So what we do is we take your Bitcoin and we put it in a Swiss vault that's a few hundred meters below the earth. And it's got these big, thick doors, and it's actually a nuclear shelter, which has been renovated into a crypto vault. So we put your Bitcoin into there, and then on the back of that, what we do is we issue a derivative product, which is linked to that underlying crypto asset, whether it's Bitcoin or Ethereum or Bitcoin Cash. And we call this a Bitcoin global note or an Ethereum global note or Bitcoin Cash global note. And that global note is representative of the value of the underlying. Additionally, it's fully regulated. It has a title, and it's auditable. It has what's called an ISIN, which is a International Securities Identification Number, and it goes through clearing and settlement just like a normal stock would. So when you think about a bank, right, they want to deal with regulated financial products. And so if they're able to take a financial product like the Bitcoin Global Note, they can take it from one bank and put it into another. And they know exactly how clearing is going to work through traditional systems. They know exactly the risk that they can put on the transfer of that asset from one to the other. And they know exactly how they can value that asset and put it on its balance sheet books so that they can properly do their accounting. Lastly, let's say someone comes and steals your Bitcoin Global Note and you want to recover it. You have full legality and full amount of laws behind you that would allow you and go to and recover that note. So it's incredibly powerful from a regulatory and a financial perspective, because what we're doing is we're taking an unregulated product, and then on top of that, we're creating a financial product which is fully regulated, fully compliant, and provides clarity in every single situation for any bank, for any asset manager, for any pension fund, for anyone that wants to securitize their crypto. They can do that, and they can do that only through the global note. And we're going to be doing it at premiums which are incredibly low. So check out CyberTrust, see what it's like. We're happy to answer any questions, and yeah.